Hi everyone, welcome to Market Insights by J2Wealth. Today we have Ms. Meeta Shetty, a fund manager at Tata AMC. She has extensive experience in equity research across various sectors at leading institutions and has been in the fund management position since 2018. She currently handles an AUM worth of $2 billion across funds like Tata India Pharma and Healthcare, Tata Focused Equity Fund, and Tata Digital India Fund. We're honored to have you with us at J2Wealth, ma'am.
Thank you.
Moving on to the first question, considering the current market scenario, do you expect a further on downfall from where it is now?
Sure. So generally, we don't look at markets in the very near term. Our views are always for the medium to long term. But looking at the valuations where the Indian markets are trading at, certainly, if we look at the past 10-year or a 20-year average, we will look slightly on the higher side. So we would believe that if markets were to time correct for a year, we will be more reasonable as far as valuations are concerned, and maybe markets will look far more attractive versus today. So that's how we are thinking about markets rather than looking at whether it's correct in the near term or it doesn't. I think that what we think is that probably it will be in a range bound movement for a while till the valuations are back to a very, very attractive level again.
Okay. Considering numerous economies have given a rate cut in their economies, how do you expect the market to take, whether it be a positive or negative impact, considering India did not have a rate cut?
Right. Yeah, so I think there was a lot of expectation that we will follow US very closely. However, we've seen the RBI coming out and saying this very clearly that till they have little more comfort on the inflation number, they will want to hold the rates where they are. But I think eventually we will follow, and that's how the expectations are also built in when we are looking at say financial services or any other sectors, etc. So I believe that we will follow, possibly with the lag.
One of the most interesting things currently is that the FIIs have sold over 80,000 crores, which is more than the COVID era times. How do you think that has an impact, or how do you view that as a sell-off?
Right. So I think yes, FIIs have been very aggressive sellers in the recent times. But even if you step back a little and if you look at last 3-4 years, we've had these bouts of selling continuously from the FIIs. In fact, FII holding in the Indian market today is low to about almost 16% from about plus 20% a couple of years back. So certainly they have been sellers time and again, and in between we do see some green ticks, but yeah, on a large data basis, you will see that the more red ticks than the green. I believe that, as I said, that valuations for the Indian markets are slightly higher versus the our own history. And that's because we've been continuously surprising and giving a better fiscal deficit target or macro growth or our overall corporate growth. All of that is stacking up very well, and that is what has taken the valuations to a higher level. But I believe that for global money to turn their heads here, one is that valuation starts looking more attractive, possibly after some time correction, and second is if interest rates fall further in the global economies, then I think that will also make the room better for them to actually start looking at a market like India.
To add on to that, could the FIIs return to India once the impact of the stimulus in China is taken off?
So yes, the recent outflow has been largely because of the interest in the Chinese economy and the stimuluses which have been announced, and in anticipation of more such stimulus getting announced. But in the last 2-3 years, we've seen a couple of times when actually money has flown to the market, but then has not lasted long for some disappointment which might have flowed in. But this time around, we'll have to wait and watch and see how things pan out over there. But I think that India's story overall remains to be one of the best stories to play the overall GDP growth and the macros and the manufacturing bandwidth which our country is adding. I think all of that makes India look far better from a 10-year or even a 20-year perspective in the long term, which I don't think any other economy actually gives you that kind of comfort. So I believe India will remain a very important market in the entire ecosystem. Possibly at slightly low valuations, maybe things become more attractive.
Considering that it's pretty hard for myself to manage a 1 lakh AUM, how do you handle the risk of handling over $2 billion?
I think it's inbuilt into the philosophy that we have, which is GARP, which is what Tata AMC stands for, which effectively takes into account the valuation part, and it also would mean that we are not ending up buying something which is very, very expensive, because usually what happens is that if stocks or a sector or a market is very overly valued, even a small negative would mean a large drawdown, whereas this philosophy itself takes care of that, and that becomes a good risk aversion philosophy for us to balance risk and reward both.
Considering you handle two sectoral funds, that is the digital and the pharma side, how do you view these two sectors to perform from here on?
Sure. So let me take IT first. Look, the growth rates on the IT services side have fallen quite a lot. We ended at about around 2% growth in fiscal 24 from about 7-8% CAGR that was usually seen during the pre-COVID times. COVID obviously had a spike up, but we are down to just about 2%, and that was in anticipation of recession and macro fears which were there, possibly going to playing out in the US. Clients actually took a cautious stance. That is currently starting to get better, and we expect that growth rates will improve over this year and also a year next to fiscal 24 and 25 and 26, all the 3 years. So 2 will probably go to 5 and then towards a high single digit. That's how the overall scenario is looking like. So in my sense, IT sector will see a growth uptick. However, when I look at the valuations for this sector, they are back to COVID levels. So that's a little discomforting to us, and hence we think that this sector will be more of a compounder, and it will be similar to what the earnings CAGRs will look like.
In other sectors.
Yeah, that's right. On the other side, pharma has actually seen a comeback after a lull period of good 7 odd years. And what we see on the ground is that US, especially US exports, have seen some positives in terms of pricing scenarios slightly getting better, and the shortages in the US also have been at quite high levels for the last almost 2 years now. All of that is actually favoring the sector, and we think that this positive aspect on the US side might sustain for a couple of more quarters, which will probably keep the sector seeing some earnings upgrade even going down the few quarters down the line.
Got it. Currently, with the current scenario, which are the sectors you think would perform from here on?
So what as a house we believe is that wherever valuations are reasonable is where we are seeing a lot of comfort. So private banks is certainly one of the areas where we think valuations are pretty reasonable, and credit growth, although slightly lower than versus what we saw last year, is still in a healthy double-digit kind of number at an industry level. So we certainly think that this is what fits very well into the GAR philosophy that we follow. So I would say that that sector certainly looks good.
Currently coming out of the fund, which is the Tata India Innovation Fund, can you explain to us how this is different from other innovation funds and why it is a good time to invest in it?
Sure. So look, actually innovation can be defined in multiple ways. How we are seeing innovation is that innovation can happen at 3 levels. It can happen either at the product level or at a service level or at a business model level. And via this fund, we are actually trying to capture all these aspects of innovation. Now, further down, one layer below this would be that some innovations are very incremental. They keep happening gradually over years, over decades, and the product or the services keeps changing for better. And then there are these breakthrough kind of innovations, which probably means that that service or product never existed. So in this fund, we will try to touch base on all of these aspects, and we'll try to choose universe from where all we find comfort, and all of these aspects, or rather one of these aspects, gets covered. So that is what I think will also be a differentiator between how we are looking at innovation versus our peer set. The idea is to have a portfolio which will look at 10 years or 20 years ahead, and try to add value to investors via choosing those stocks which are changing our lives, or probably environment, or probably businesses in a much better, efficient way. So that is what we're trying to capture via this fund.
And for our J2Wealth clients, which Tata mutual fund would you suggest to invest in the current period?
Well, there's no one answer for that, because every client will have their own risk appetite, and the time horizon. So I think that take recommendation from J2 team, because they will be the best people to actually guide you through that. I can say that at Tata AMC, our endeavor is to, as I said, follow GARP, which takes care of risk and reward both, and we will try to do our best. Thank you so much.
Thank you so much for the opportunity for joining us here, ma'am. I've had a great time talking to you.